Hello, this is John Martinka, and I'm known as the escape artist for the work I do helping people leave, or should I say, escape their current job to own their own business, to escape their business and exit with style, grace, and more money, or to get off that plateau and escape out of it to a next level via growth by acquisition, by buying other companies. And with me today is Jeff Wilcox. Jeff is a senior vice president with Columbia Bank, and he is the commercial banking team lead in Bellevue, Washington. Hi there, Jeff.
John, it's a pleasure to join you. Good morning.
Yeah. So let me start out not talking about buy-sell deals, but just what are you seeing with your existing customers, what they're going through, how many are doing good to, okay to good versus hurting?
Yeah, first of all, our immediate customers that we interact with and we work with on our team, for the most part, are quite stable. They're doing well. They're well-capitalized organizations with strong balance sheets. What we're seeing with most of them right now is, certain caution, of course, in managing expenses. We're seeing them holding high levels of liquidity. They've pulled back significantly on previously planned capital expenditures. They're thinking a lot about, they're assessing the situation to the best of their ability and thinking about the future. Some of them are definitely sitting on the sidelines and going to be waiting for opportunistic expansion or buy-side M&A activity. We also have some customers that, are thinking about other things, and they're just not sure where they're going to go, and they're biding time, I would say.
Yeah, because it's a time of uncertainty, isn't it?
Very much.
Okay. So it doesn't sound like your portfolio of your team has a lot of hurt businesses, but I'm sure there are some. I'm sure the PPP program saved some of them, at least in the short term. But so those that were hurt a bit, what do you think? They going to stick it out and rebuild, or are they going to look to, maybe now's the time to get out? I've done this 2 or 3 times before.
Yeah. Well, I'll start off, by talking about our clients that really we don't believe have been hurt too significantly by this, and then I'll segue to those that I think where there's some real stress. I would say the vast majority of our clients are equipped to move forward with their business models and plan to move forward with their business models. There's a few that are going to sit and wait, and I think that will look to sell in the future, that we're planning to sell. We certainly have some customers that are in industries now that are in where there's significant question in regards to how these industries are going to recover and whether they are they going to be viable in the future. There maybe is a handful of those, and those customers at this point today, knock on wood, are still adequately capitalized, still sitting on liquidity. I don't think they know where they're going, but there's significant concern.
Yeah, I can relate to that. I was doing some exit planning with the company as this hit, and the company's customers got shut down. Well, they don't know what's going to happen. It went from exit planning to survival planning on their part.
Right.
So when it comes to looking at loans and acquisition loans in specific, what kind of financial information are you looking at now? And is it different than what you looked at 6 months ago as a starting point?
Yeah, there's certainly been some shift in how we look at things. I mean, today we're hyper focused on liquidity. We're very focused on cash forecasting versus EBITDA forecasting. They both have a role, but cash forecasting right now is really what we're focused on. We're also really hyper focused on the quality of receivables. This is something that we've always looked at in the past, but if receivables aren't collectible, your balance sheet can look adequate, but is it? So there's a lot of focus on that. More than ever, we're focused on companies that have an ability to put out a good real-time revenue forecasting. Not everybody has an ability to do that, but really has a handle basically on how revenues are developing and being recognized. This requires a strong accounting infrastructure. So that's something that, we take into consideration.
Okay. So shifting from the financial information, what about the non-financial factors of the business? The customers, the employees, the management team, the suppliers, all of that. How are you looking at that? And, to what degree, if any, are you looking at it differently than, again, 6 months ago, a year ago?
Yeah. I think there's two primary areas of focus there. Industry vertical is paramount. And again, we always have looked at industry vertical, but there's been shift in that because today there's industries I think that we felt good about that we now question. There's industries that we felt good about that we really feel great about now. So we're looking at industry vertical and we're looking at, opportunities within certain verticals, but also other external threats now within verticals that might play into supply chain and those types of things. We're looking at management capability, depth, experience, attentiveness to environment, more than anything else. Does management, can they reinvent or pivot? Are they equipped to do that?
Okay. So someone comes to you, or multiple people are coming to you and say, hey, can you finance this acquisition I want to do? Have you seen deal structures changing? How do you factor that in with the coronavirus? Is the amount you'll lend changing? What are your thoughts on that?
Yeah, I would say the amounts that we are going to end up lending are certainly in the midst of changing. One of the things that's very noticeable is that we're even more focused on having a strong secondary source of repayment. The days of stepping into a little bit of a collateral airball, those types of things, I think that at least for now that those are gone. I think we're more apt to step into government enhanced lending. Our team, hasn't really done a lot of SBA lending in the past. And I think we're more likely now to kind of turn to the SBA, especially with some of the recent enhancements to that program than we have been in the past. We're focused on high levels of liquidity, working capital. We're sensitizing in a more stringent fashion projections and forecasts than we have in the past. And that results in lower advance rates, lower cash flow leverages. So I do think we're going to see diminished loan amounts, but we are going to continue to lend. And I think that that's really important. So covenant packages will probably change a little bit as well to focus a little bit more, in some cases, on that balance sheet where you might have had less focus on it if it's simply a cash flow deal.
Okay. So when you say sensitizing, you mean running a stress test. How does this loan look if revenues go down by different percentages?
Correct.
Okay. Is there any kind of benchmark that you use that say if it's affected at such and such a percentage in the stress test, like 20%, 30% loss, we won't do it, but we're okay if is it case by case?
It is case by case. There's certainly no uniform approach. I think that, in each case that we model, again, we're going to start with vertical and where we believe that vertical might go, get educated to the best of our ability. And then we're going to look at management. And again, that forecasting ability of management and the team that's there, because it's really difficult to know exactly what future cash flows are going to look like. So we're going to start there. Then we're going to come up with, we're going to have a forecasted cash flow. And then depending on those variables, that management team and the industry, we're going to determine how we sensitize.
Okay. So shifting a little bit, there's been a lot of government money out there to businesses. And I'm wondering how the bank is looking at, say, the PPP and other government programs, and what you think buyers and sellers of businesses should be considering if there's PPP money on the books.
Well, we're not really looking at, PPP loans. Well, first of all, one of the things that's most important to us is if a company has a PPP loan, we want to understand what's going to happen with that PPP loan. And at this point, the assumption is that the vast majority of companies that we look at will end up in a forgivable or vastly forgivable situation with the funds that they've taken that have been advanced to them. But we really need to understand that piece. That's our starting point. Impact to balance sheet, impact to future debt service obligations, those types of things. So we're going to start there.
Okay. So just another piece of underwriting.
Correct.
Okay.
Yeah. More underwriting.
Yeah.
Yeah.
Well, unless you have anything else to add, I'd like to just close this by asking you, what are you seeing on loan volumes, buy-sell deals and non-buy-sell deals? I know you said a lot of your customers are pulling back on CapEx.
Yep.
So what are you seeing volume compared to 6 to 12 to 18 months ago?
For us, a lot of the volume was driven by expansion, capital, facility expansion, CapEx expansion, growth. That has stopped, fully stopped. Plans to expand have just slowed down significantly. So projects have been sidelined. Expansion was also coming from M&A activity. We had a very high level of activity in that sector last year. Entering this year, I expected it to surpass what we did in 2019. It has skidded to a halt. We have clients that are, looking for strategic acquisition that are still talking about it, but they've slowed their plans. They're taking a wait and see approach. So we've seen slowing, considerable slowing with expansion-oriented opportunities. And our opportunities today, will come probably in the form of new relationships, those types of things. And we'll have to find those.
Okay. Well, based on what you just said, I'm going to put in a shameless plug for myself and say if any of those clients of yours thinking of growing by acquisition would like a copy of my book, Company Growth by Acquisition Makes Dollars and Cents, SENSE, feel free to let me know and I'll get them a copy.
Of course, we'd be happy to put that in their hands. This is an opportunity as well to share this with my colleagues internally, et cetera, get that message out to them as they talk with their clients.
Okay. Well, Jeff, thank you so much. Once again, Jeff Wilcox, a Senior Vice President and the Business Banking Team Lead in Bellevue, Washington for Columbia Bank. Thank you.